Somewhere in the process of looking at a house in Mexico, usually about the time you start to get really interested, somebody gets you all discouraged by telling you that foreigners can't actually own real estate in Mexico, that what you get instead is some sort of a long-term lease or a trust, and the bank owns the house. The first half of that is partially true. The second half is completely wrong, and it puts the brakes on a lot of purchases that should have been completed. Hi, I'm Maya with MoXi. We finance homes in Mexico for United States citizens, which means we deal with this structure every day. Here's a breakdown of how the whole system actually works, as well as a look at who and how MoXi can help. Article 27 of the Mexican Constitution was written in 1917. It reserves direct land ownership for Mexican nationals inside two specific geographies: any land within 50 kilometers of a coastline, which is about 31 miles, and any land within 100 kilometers of an international border, which is about 62 miles. Together, those are called the restricted zone. This is a provision about national sovereignty, written after a period when Mexico had lost a great deal of territory. It is not a permitting issue. It is not a visa issue. There is no immigration status that changes it. A foreign national cannot hold direct title inside that zone, and the zone covers almost everything foreign buyers are looking for. Cancun, Playa del Carmen, Tulum, Puerto Vallarta, Los Cabos, and all of Baja California are inside it. Roughly 37% of Mexico's land area. Like a lot of countries, Mexico wanted foreign investment in its coastal economy, but its own constitution ruled out the usual way of getting it. So, starting in the 1970s and in its current form under the Foreign Investment Law, it built a legal instrument specifically to solve that. That instrument is the Fideicomiso. It is a three-party arrangement. The seller places the property into a trust. A Mexican bank holds title as trustee. You are named as the beneficiary, with the right to fully control, use, and enjoy the property. The vocabulary shows up on every document, so it is worth learning. The bank is the fiduciario, the trustee. You are the fideicomisario, the beneficiary. This wasn't a loophole somebody found. The Mexican government built it on purpose for exactly this, and it's been the standard mechanism for about 50 years. Here's where the idea that you are renting from a bank falls apart. As the beneficiary, you control the property. You can occupy it yourself, rent it out, remodel it, mortgage it, or sell it. Those are the same things a title holder does. The bank cannot sell the property. It can't place a lien on it. It can't encumber it in any way on its own initiative. It can only act on your written instruction. The bank holds legal title, but it holds no beneficial interest in the property at all. Its role is custodial. Trust operations are supervised by the Mexican banking regulator, and if a trustee bank were to become insolvent, the regulations require the trust to move to another authorized institution. The property never was and never will become a bank asset. The precise way to say this is that the bank holds legal title, and you hold control and every economic right attached to the property. That distinction is real legally. In terms of what you can do with your house on a Tuesday afternoon, it makes no difference at all. That is a property owned outright. If you are financing it, the beneficiary side works differently while the loan is outstanding. There is one area where this structure is not merely equivalent to owning directly. It's better. You name substitute beneficiaries in the trust deed. When you pass away, they step into your position directly, under the terms of the trust. No Mexican probate, no fighting for legal possession of the asset. Anyone who has moved an estate through probate in the United States knows what that is worth. And this works from the day the trust is drafted, not from the day you pay the loan off. If there is a balance outstanding when you pass, your heirs step into your position, which carries the property and the remaining debt together. Same as an inherited mortgaged house at home. The difference is that here it runs through the trust deed instead of through a court, and it works whether you are 1 year into the loan or 29. Now the question almost everyone asks, and the part the internet gets wrong most often. The trust runs for a 50-year term set by law, and it is renewable. When that term approaches, You petition for renewal and you get another 50 years. When you buy a property that is already held in a trust, you have two options. Take over the time remaining on the existing trust, or open a fresh one with a full new term. What does not happen, at any point, is the property reverting to the bank or to the government. Renewal is an administrative process with a fee attached. It is not an application where somebody decides whether you get to keep your house or not. Everything I've described so far is what the law requires inside the restricted zone. Tulum, Cancun, Los Cabos, Puerto Vallarta, Sayulita, and Tijuana are all inside the zone. Outside the zone, the constitutional restriction doesn't technically apply, and a foreign national can take direct title the way they would at home. San Miguel de Allende, Guadalajara, Querétaro, Mexico City, and Monterrey are all outside. Don't be too quick to judge this from a map. Mérida is a good example. It reads as an interior colonial city, and it sits about 37 kilometers from the Gulf, which puts it inside the zone. Your notario confirms it for the specific parcel. And here's the part that matters if you're financing rather than paying cash. A property financed by MoXi is held in a Fideicomiso, regardless of where it sits. Inside the zone, the law requires it. Outside the zone, it doesn't, and we use the structure anyway on every loan we write. Now you might reasonably ask why we'd use a trust in a place that the law doesn't require one. It's a fair question, and the honest answer is that the trust is what makes the loan possible. A 30-year, fixed-rate loan, in dollars, on a house in another country isn't a simple thing for a lender to offer. There's a conventional Mexican mortgage we could use instead. We don't, because the trust gives a lender a clear and workable way to hold their position, and without that, this product wouldn't exist. So the trust isn't a formality. It's the thing that lets us offer a product like this at all. And it works in your favor too. Everything I described earlier, the succession provisions especially, applies to you whether your house is inside the protected zones or not. On cost, setup generally runs a little less than a couple $1,000s, with an annual trustee fee of a few $100s after that. Those are the numbers we see, and they vary by bank and by property value. On timing, the step that matters is the permit from the Secretaría de Relaciones Exteriores. It's the one you don't control and the one most likely to stretch a closing. Start it as early as your purchase agreement allows. Everything else can theoretically run alongside it. One more belief worth correcting because it costs people the most money. A lot of buyers think a property held in a fideicomiso can't be financed and that buying in Mexico means paying cash. That's just not the case. The beneficiary can pledge the property as collateral, and finance transactions have run through this structure for decades. Here's how MoXi does it. The instrument we use is a Fideicomiso de Garantía, a guarantee trust. A Mexican bank holds legal title as trustee, the same as always. The beneficiary side is held in two positions. MoXi holds first position in the amount of what you owe. You hold second position, which carries the right to use and enjoy the property and everything in it above the debt. When you pay the loan off, you become the sole beneficiary. Compare that to a mortgage at home, and it's the same arrangement in different words. A lender in the U.S. records a lien and ranks ahead of you until the balance clears. You never hear anyone say that you don't own your house because there's a mortgage on it. This is that, expressed as ranked beneficiary positions instead of a recorded lien. One difference you should know rather than discover. When a lender forecloses in the United States, it generally goes through a court process that takes quite a bit of time. A guarantee trust doesn't work that way. The trustee already holds title, and the positions are already defined, so enforcement on default runs through the trust rather than the courts. It's faster and more secure for the lender, with less process between a default and a transfer than you'd expect at home. That only matters, of course, if you stop paying, which is true of any mortgage anywhere. Another thing worth being transparent about: everything I've described so far is the law, and it applies to every foreign national the same way. Our loan program does not. At this time, MoXi lends to United States citizens and tax-paying permanent residents of the United States specifically. If you hold another nationality, the rules in this video still apply to you. But for the time being, the availability of our loan program won't. So if somebody told you that you can't own property in Mexico, two separate things got flattened in that sentence. Ownership got confused with direct title, and one part of the country got expanded into all of it. Confirm with a notario whether the property you are interested in sits inside the restricted zone. Budget for the trust. Name your substitute beneficiaries carefully, and start the foreign affairs permit early. And if you are a U.S. citizen who assumed you'd need to bring all cash to purchase a home in Mexico, we've got good news. MoXi can help and would love to talk to you. Scan the QR code on the screen to get connected with a MoXi mortgage advisor for a complimentary discovery session, or visit www.moxi.global to learn more.